Hey, Steve Saretsky here. As always, this Canadian real estate market update with a particular focus on Vancouver. If you're getting sort of value entertainment out of these videos, all I ask that you hit thumbs up and subscribe. Questions, comments, put those below. A little bit of housekeeping before we dive into this week's video. This is basically we're basically going to talk about the Vancouver real estate market statistics for June, sort of what I'm seeing, not only from a feet on the ground, but from a data perspective, etc. This is really a summarization of the Saretsky report, which I publish every single month. 15, 20 page PDF summarizing the market, things that I'm watching and finding interesting, etc. So if you want to read that, I highly encourage you to check it out. There'll be a link to that below in the comments or in the description, where you can go and take advantage of that. Also, the purpose behind this channel, as I've talked about, just in the intro there, that this is the Canadian real estate market update. And so part of this whole thing is really just a push towards, financial literacy, transparency, and really just sifting through the Canadian real estate sort of landscape, for your typical person that's trying to understand things. Particularly, obviously we focus on Vancouver, but through my contacts, etc., I'm always looking at various deals in various different spaces, etc. I have come across one in Calgary. I know that people will say, oh, well, Calgary's depressed, it's ugly. To be honest, that's kind of what I like, a little bit maybe perhaps contrarian in terms of that it is depressed, it is come down so much that there's probably some more downside to go. I won't argue that, but I prefer to buy when markets are down and / depressed, as opposed to when they're frothy at the tops. So really good opportunity there. So I'll probably talk about that next week. But if anyone's interested in investing in Calgary, I have a pretty unique opportunity there that I personally will be investing my own funds in. Really great new project where the developer is actually in some distress and is looking to bulk sale a whole bunch of units. And so I'm going to be taking that to a lot of my investor clients, and basically the more money essentially that we can pool together, probably the greater discount. But again, this is not a pitch or a sale or whatever, or some sort of disclaimer that I need to put there, but simply I'll be discussing that next week, and if people are somewhat interested, I'm happy to discuss over email, but that's all I can really say at this point. But let's get into the Vancouver real estate numbers for the month of June. Really just a continuation again of the trend. As I've talked about in real estate, these things are so slow moving. This seems to be this misconception in the real estate industry. Perhaps it's blind optimism that we're going to go from sort of 20-year low in sales to all of a sudden a V-shaped recovery, and 2 months time or next month that the prices are going to be back up and we're going to be going to all-time highs. That's really just not the case. Real estate is slow moving. That seems to be what's happening here. So if you look at June sales, cumulatively across all property types, it was a 19-year low in home sales for the month of June. So if you take June, you compare it to all the other Junes, it was a 19-year low. So again, all you have to do is go back and watch these videos. I've really been lamenting on this for some time. People were hyping up the month of May as if they, it's a bounce back. Here we go. Things are heating up, and it was, as I said, it was more just like a head fake. It was still a very, very weak May historically. People kind of got caught up in that. So June kind of bounced back down. But if you take a pull back and look at the broader picture for the month of June, so if you look at January through the end of June, so you have a 6-month period. Basically, half the year has come and gone. That's arguably, the first half is much busier than the second half because you have that huge spring market in there from basically March to the end of June. So that busy part of the season is gone. So if you take those first 6 months of the year now, January through the end of June, it's the fewest number of transactions across Greater Vancouver for all property types. So if you take a look at this chart, it'll actually show you that this is the fewest number of sales in that 6-month period, dating back to the year 2000. Was the last time sales have been cumulatively this weak. So I think that really just shows you the predicament that we are in today, or the significant slowdown in sales volume. So But again, if we would take that back, we can filter that through, the detached space, the condo space, etc. Looking at detached housing continues to be extremely weak. So detached sales came in at the lowest that I've seen in my data, which goes back to 1991. So it's the fewest number of home transactions, and that's happened every single month this year. Has basically been that way. So the single family housing market, there's just no way to put it other than you have record low sales, you have inventory, months of inventory is creeping up around 9 months of inventory, which is definitely in a buyer's market, and you have prices declining. The home price benchmark is down year over year, about 11%, 10.9% year over year. As you can see in this chart, is clearly the direction of detached home prices is down. So you have weak volumes, rising inventory, lower prices, and not only that, but mortgage rates have fallen nearly 100 basis points. The 5-year fixed, I had clients getting in at 5-year fixed at 2.79% through an uninsured mortgage. So that really should just tell you that clearly there's an affordability problem. So even though rates have come down and prices have come down, there isn't the flood into the market to not only drive sales up, but also drive prices up. And we just haven't seen that. So to me, it's kind of, I think at the end of the day, it really is confidence. Confidence is what drives markets. And I think that this is a difficult, place to transition out of. Once the sentiment has shifted, it's hard to come out of that. So, which is something that we'll discuss after I talk about the condo market. The condo market, same sort of thing. Everyone's kind of saving grace. Well, condos haven't come down, but they are certainly moving. It's the fewest number of condo sales since the year 2002. Again, this is not adjusted for population growth and housing stock. Obviously, there's more condos today than there was, back in 2002. So it's the fewest number of transactions for condos since 2002 for the month of June. Again, really just a continuation of what we've seen through the past 6 months, all through 2019. But prices, again, everyone say, well, prices of condos aren't moving. As I've kind of reiterated before, is they're declining, but very, very slowly, very subtly. So it's like everyone's like, well, what happened to condo prices this month? Like, what happened? It's like, if you just look, the condo prices are declining by basically 0.5% a month, just over 0.5% a month. Nobody's going to notice 0.5%. Nobody notices 0.5%. And especially because, each condo sale is going to be slightly different. It's not like you're looking at a stock ticker where clearly the price is defined every single minute of every single day. So nobody notices 0.5% until at the end of the year, you kind of look back and you go, oh yeah, no, it looks like they're down 6 to 10%, 1%, 0.5% a month. It starts to add up. So it's kind of it's a very slow process. And so we have, condo prices down 8.9% on a year-over-year basis. I believe it's the steepest decline in condo prices since the year 2009, which was a very sharp and dramatic decline before ultimately making that quick recovery. But I think that this time certainly seems much different than 2009, at least looking from the data perspective. But speaking earlier, I was talking about sort of confidence and how to flip the switch. So generally speaking, is how you get out of these slumps, particularly in housing, is you need some sort of policy change. That can be stimulus, and obviously how effective is stimulus, how much stimulus do you provide. That can be government regulations, that can be banking regulations, etc. Well, as of right now, the Toronto housing market, which I've shared my opinion in these videos much before, from a data perspective, it appears to have, quote unquote, I think, stabilized. So it's kind of in this, and I don't think they're out of the woods. I think there's still a lot of risks in that GTA market, but it's stabilized, at least from a data perspective. So I'm just looking at the lens through a policy-making decision, and I think regulators are more concerned about the Greater Toronto area than Greater Vancouver. So as long as Toronto keeps sort of stabilizing and moving sideways, I think there's no rush for policymakers to come in and start, changing stress tests, removing stress tests, just firing, purchasing a whole bunch of Canada mortgage bonds. I don't see that. I think, and so they don't really care about Vancouver. I think if you're the BOC or your regulator, you say, oh well, Vancouver is kind of crazy to begin with, and just don't worry about them. I don't think that Vancouver is necessarily quote unquote a systemic problem. So looking from a regulator's perspective, there seems to be no change or desire to amend any of these policies, and you can hear them coming out almost on a weekly basis suggesting that. But not only that, as soon as the media reports came out on the Vancouver real estate market once again hitting a 19-year low in the month of June, BC's Finance Minister Carol James, who's responsible for all the provincial housing regulations, was on a Twitter storm lamenting about how fantastic this is, that housing is returning to a quote-unquote affordability, that we're sort of on our way to our goal and objective of making life more affordable for British Columbians and yada yada yada. And again, this isn't a political message of whether you agree with it or disagree with it. I'm just looking at this from an objective viewpoint and saying, okay, well, if I have my federal regulators, which have little desire to amend things, and I have my provincial government, which has just absolutely hammered the market with taxes and regulations, basically cheering about how great this is, that's probably something I personally don't want to, bet against, or at least try to go against. I think if the government is determined to what appears to be lower home prices, then I would look at that certainly as a signal and go, well, maybe that's sort of risk off, right? Maybe that's, you kind of pull back a bit, as opposed to going, say, chips all in on maybe building a spec single family house, right? Like, to me, that's how I think. I perhaps agree to disagree, but I think if you're looking for a change in the housing market, that has to come from a policy change or some sort of random macro event that we can't really foresee. Again, that could be Hong Kong. It seems to me like Hong Kong has somewhat stabilized in terms of they've removed the referendum, at least for now. So there doesn't seem to be sort of any exodus, quote unquote, that people were concerned about coming out of Hong Kong. Again, that's one of those macro events that could change things. But until I sort of see some shift from policymakers, or at least for the data to start to change, I think that it's kind of status quo. We're entering into the slower summer months here in July and August, where people are away on vacation. So you certainly won't see much activity in the next couple months. So anyways, that's all I got for this week. I hope that helped. Otherwise, see you next week.